You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music can mean only one thing. It is Friday. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. We do mean old. Celebrated our 13th anniversary this January. So in the world of podcasting, we are dinosaurs. I prefer pioneers, though. A little better ring to it. And of course, you guys can join us every Friday live, 1 p.m. Central, 2 p.m. Eastern, or after the fact on your device of choice. We don't judge as long as you listen. Send in those questions, those comments. If you like what you hear, make sure you leave a review on your platform of choice to keep that influx of new listeners discovering the show all these many years later. We do indeed, despite what Andrew says, we do indeed like to hear from you guys. And joining me on the old program today, we got a good group of folks to help me parse some volatility, and since I unfairly maligned him, I will bring him on first. He is our old friend, the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir.
Thank you very much. It's good to be here. Since you got it started off, you had to get the umbrage train rolling right away, right out of the gate. You had to throw it down. Right out of the gate.
That's how I roll here, sir. That's how we do it here. Been a busy week for you. I'm surprised your voice is holding up. You got the option blocks, a little guest appearance on TWIFO, and dragged you into the futures waters yesterday. Now on VolViews. You're making quite a few appearances this week, sir.
It must be the problem is I'm like the coronavirus, unfortunately. I'm replicating. So I don't know if that's good or bad.
Yes, you keep digging your claws ever deeper. We keep trying to get out. You keep pulling us back in. And also joining us once again joining us from the land down under, formerly the land of fires. Now they've swapped horrific fires for torrential downpours. Mr. Simon Ho, the CEO of T3 Index, beaming in from, sounds like pretty wet Sydney. Simon, how are things going with you, sir?
Yeah, pretty good, as you said. It's kind of a mixed bag here of weather. So fires one day, torrential rain the next. So better this than the other thing, though, I have to say.
Yeah, definitely know which one I would pick of the two. And also joining us, holding down the MIAX hot seat today, he's a newcomer to the program and indeed to the network. He is Pat Hennessy, the head trader over there at IPS Strategic Capital. Pat, welcome to the Volatility Views program.
Hey guys, thanks for having me on the show. And congratulations on the anniversary. That's awesome.
Yeah, we've been rolling for a while here. Sometimes it seems like an eternity. But just a meager 13 years. Well, Pat, as we were wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the derivative space, as well as what it is you do over there at IPS Strategic Capital.
Sure. So I've been with IPS Strategic Capital for about 8 years now. IPS is an independent RIA that's based in Denver. We focus on running hedged U.S. equity strategies and other options-based strategies for high net worth individuals, financial advisors, small institutional clients. The goal is really to allow our investors to define their exposure to markets rather than, hoping that correlations remain steady, or attempting to manage risk after the fact. Our mantra is kind of that we can define our risk today for tomorrow. We have a variety of separately managed account strategies, as well as kind of our flagship product is a 40 Act mutual fund product called the Absolute Return Strategy. The ticker is IPSAX, and it's a hedged U.S. equity fund. So, yeah, it's my background. I've actually worked here since I graduated from college. I met my boss, who's the founder and CIO of the firm. He was an adjunct professor of mine at the University of Denver, where I attended college, and got to talking to him and really kind of fell into this role and fell into this company, and have been doing it since I graduated, and just absolutely love it. I'm extremely fortunate to be in the role that I am, and just trying to do what you guys do, which is digest what's going on in volatility markets. It definitely keeps us busy over here.
I do believe you have popped up in a few of our crystal ball contests in the past, including fared pretty well, I think, in some of our annual predictions. So there you go. There's hope for you out there too, listeners. You do pretty well in our prediction pools. You too can make it on to the Volatility Views program. Now we have to keep on rolling. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we do exactly what it says. We review the week that was and indeed still is, from a volatility trading and trending analysis, unusual activity, all those fun perspectives. And it's been a weird week, and it's a weird end to a weird week, quite frankly. There's a lot of things going off. Of course, there's the micro, there's the earnings, there's the macro, which are the various political winds, as well as, of course, the ever-present threat of a pandemic looming out of China. And the market, for the most part, has seemingly shrugged off a lot of those concerns. And we saw that for the better part of the week. Seemed like the worm may be starting to turn a little bit yesterday. We saw a mild sell-off in most of the broad indices, and that pretty much reversed itself by midday. Pretty much as soon as we were done with the show, the sell-off ended. And now today we're ending the week with yet another mild, very mild sell-off there across most of the major indices. S&P off about 0.1% or so. The NASDAQ almost literally unched ever so slightly to the downside. The Dow a little bit more of the laggard today, off about 0.33%. And of course, all that little bit of red on the screen means we're ticking up a wee bit out there in the vol products. Spikes come into showtime right around 1460, 1470. Puts it down about 1/3 of a handle from where it was this time last week. VIX cash, similar level at about 1440 or so right now. That puts it down about a little more than half a point from where it was this time last show. And of course, our old friend VVIX, aka the volatility of volatility, has been moving. As you can see, we have a little bit of volatility out there. So it's staying pretty frothy. We're at not quite in the triple digits, but pretty close, down to about a 98.30. That's still up from last week, up about a little over 3, about 3.3 points from where it was this time last week. So a lot of interesting things to parse out there on the volatility landscape. Pat, you are our guest, so I will allow you to go first, sir. What has been lighting up your tape? What has been on your radar in the volatility space this week, sir?
Well, I think that there's a few notable things that we've been taking a look at here. The first one that I'll point out is just the rampant call buying in the S&P, in the SPY, in every tech stock name. It's a strategy that we like, and it's part of the kind of core strategy that runs in our mutual fund. For a lot of reasons, I think that stock replacement type strategies make a lot of sense right now. There's a trade that I think I was going to point out a little bit later, but a really interesting SPY trade that was rolled out this week, and a trader netted about $60 million on that trade. So I think, just the concept of being able to take advantage of extremely cheap volatility in the call tail, has been an attractive trade for the last few months, and it continues to work for a lot of participants. And then, the other thing that's kind of stuck out to us has been, the VIX at 1433 with the market, let's just call it, 15, 20 handles off of its all-time highs, is pretty high. I think that there's a good reason for that, and, that's the Super Tuesday event coming up in early March. It's something that, has been shown up in the term structure of the S&P 500. Traders have been pricing in a significant amount of event risk for this event. And so, what that's caused has been an artificially high VIX. I think that it's kind of perplexed some traders. It certainly isn't the VIX that we're used to when we get these kind of grind higher markets where, at the end of the day, realized vol has come down this week, but we're still 70 handles off of the lows on Monday. So, we've seen a decent move. So I think that those two things probably stick out the most. There's been some interesting trades that I wanted to highlight, but I think that we'll probably save that for later in the show.
Is that mostly where you hang your hat these days, in SPY? Or do you do any SPX, any other indices as well, or is it primarily SPY for you guys?
So we actually primarily stick to SPX options. We also are fairly active in VIX futures, VIX options, and VXX. And I would say that that's where most of it sticks. And then SPY for some accounts that, if they're not large enough to accommodate the notional size of an SPX contract, we will look at SPY as an alternative to that.
Unfortunately, we don't talk about any of those products on this show at all. VIX futures, what the heck? What the heck are those? All right. And also, let's turn our attention now across the pond where he's peering through the raindrops, attempting to keep his eye here. The smoky raindrops, attempting to keep his eye on the old market. Simon, a lot's been going on. A lot also hasn't really been going on if you've been expecting maybe a little bit of a bigger bang for your buck from a vol perspective for this pandemic. So what's been lighting up your tape from a vol perspective since the last time we chatted, sir?
Well, for me, I'm taking a look at the term structure of the VIX features at the moment, and relative to the recent shows that I have been on, since then, the contango has appreciated quite considerably, especially in the front. So I find that pretty interesting. Obviously, we have this funny blip in October, which we all know about. That's exactly the same as it has been for some weeks. I do find that kind of strange. I think maybe it's slightly excessive, but certainly understand why it's there, and it does make sense. So for me, I'm interested in this because, with the coronavirus, pretty much nothing has been able to unseat this just phenomenal rally in U.S. equities. And for the time being, I think you have to sit on it. So, for me, the best way would be to, rather than to buy stocks at this particular point, it would be to leverage this fantastic product called an option and, live at your downside then to make sure that you can get involved. So I also saw there was some research from Morgan Stanley that was published today, which is very interesting too, talking about factor investing. And their thoughts there in general are that, there could be some fairly decent flash type movements, probably to the downside. So I think that all augurs well for people who want to have stock replacement by buying call options or call spreads and such.
Now, isn't it fascinating when you think about it like that, the myriad of challenges and hurdles and obstacles that this bull market has overcome? Each one of them by itself would have been enough, you think, in the past to derail former bull markets. You know, a nearly 2-year-long trade war with our largest trading partner. That probably would have done in most other bull markets. We just very recently, just to kick off this year, we had an assassination, the threat of actual shooting war in the Middle East. We had, of course, now this growing pandemic. Last year we had a huge swath of oil production taken off the map in a drone attack. And you can name the legion of individual challenges and hurdles, and yet this bear market has just gored them all and kept on going. It's really fascinating. You know, everyone who's been a little bit unsettled by this bull for the last couple of years, you have to kind of at least tip your cap to that it's just nothing, whether you want to call it madness, dyed-in-the-wool optimism, whether you think it's warranted, whatever side of the financial aisle you fall on, it certainly is unprecedented, I think, from any other long-term bull market period out there. Mr. Rock Lobster, as you said before this week, a lot has been popping off. What has been catching your eye and indeed the eyes of your hardcores in your super cool vol trading club, sir?
The super cool vol trading club. I guess a couple things. One is I would just call the stickiness of like VIX futures to wherever VIX cash happens to be. It's under. It's under kind of my level where that fair number should be. Usually that means there's more, let's just call it some stress. So it's not really, usually, VXX or the vol products will move when the futures need to move. In order for the futures to move, the cash has to move somewhere. And that SPX at the money vol has been stuck for a week where it is. And sort of this coronavirus thing is kind of hanging out there. So, the market's pretty good at discounting known things. It has a harder time with discounting sort of not known things. So how bad is this virus going to be? Okay, well, it's bad. It's not good for China. How bad is it going to be for the world? We don't know. So we're not going to take vol all the way down. So I'm sitting in the pit and I'm trading. That's what you would do, right? You're like, okay, we don't really know. Because nobody's really selling, I think, any options. And earlier, Pat was alluding to, just a lot of buyers of options. And if you could see them dragging at the money vol the whole way up. All this whole 70-point rally, vol really never went down at the money. So there's that part. So like there's buyers of options. There's really no sellers of options. You've got these things hanging around. The Super Tuesday probably tips the election, within a week, you're going to see sort of who the front runners are. So there's an inflection point there. So the market tends to sort of like earnings. They'll keep vol bid right to the point where they need. And then the vol will release somewhat after that. So you've got these things, and my own private, my tinfoil hat is you usually need 3 events to shoot vol higher. So right now we have sort of the same 2 known events, coronavirus and the election to some degree. People would like to have some certainty to see at least who the other candidate is. And if anything kind of just pops off, I think that could ignite vol again, because already there's just not a lot of sellers of it. So we've looked at that, and what it has done is it's made a product like VXX doesn't move, because the futures really aren't moving a whole lot. They're kind of staying at let's just call it a slightly elevated, but they're really not pumped up for where they should be in this part of the cycle relative to where the cash fix is. At least that's how I look at it. So everything just kind of sits and waits. So there's a lot of that. So as far as Vol Trading Club goes, not a lot of excitement this week. If you're just looking at the straight vol products, option prices have not changed a whole lot in VIX or VXX or anything else like that. You had a little bit of a drop in VXX, but that went away pretty fast. So it's weird because it feels like it's sort of a hurry up and wait and see type of market. So next week there could be some more action. But for what I do is I like buying options when they're going to move. So this May 6th cycle could be interesting because there could be a big inflection around May 6th. Like, they bid the vol maybe into it, more Corona stuff, and then after that the vol goes away. So that's a possibility for a move. But it has been a remarkably unremarkable week in vol land, I think. I just don't think things have moved a lot. Vols have stayed kind of where they are. And it's like, okay, now does anybody want to go home long this 3-day weekend? Now there's some more quarantining going on in China. Like, people are going to be out of work in Beijing, I guess, for 14 days. Like, it's not really getting better over there. Nobody expected it. And there's that last blast of, like, every day there's some sort of new wrinkle that the Chinese aren't quite telling everybody the day before. So I think all that just adds up to a little bit of uncertainty and, uncertainty in the market at all-time highs because companies are making money. And that's what we got.
Companies are making money, and that seems to trump everything else, pun intended, out there. You mentioned kind of a remarkably unremarkable week for the vol futures. That you could tell that even on this show. Usually by the time we get into the show, the futures have moved a bit, the cash has moved a bit, and we have to evolve what we're saying about the VIX futures. So far, it's not the case. It looks like it's an exact screenshot of where we were looking at it a little bit earlier today here with the cash right around now 14 and a quarter or so. And we're seeing the Feb future about 0.6 of a point north of that, right around 14.85. And we're seeing that March future a little bit north of a point, about 1 1/3 points there, about 15.60 out there. It's not a crazy setup. Pat, you said you watch and you guys trade the VIX futures quite a bit. We've been remarking a lot here on the show that if you want to point to a weird thing that persists right now in the VIX futures term structure, it still is that little aberration, that little blip there in the October future, which as of right now is coming a little bit. It's not quite 2 points. Anyway, actually, I take it back. No, it is. It's about almost 2.5 points now from that SEP future. So it has widened to the SEP future. To Nov, it's a little bit less. It's within 2 points, but a little wider on the SEP side. So I'm curious for you, any thoughts on how this VIX futures term structure is shaping up? And are you on board with the amount of vol that the market is pricing in there for the election? Or do you think perhaps they're maybe reading a little bit too much into recent history, sir?
It's a great question. I think one of the ways that I use to kind of isolate that election risk is to look at the futures butterfly out there. So buying SEP, buying Nov, and then selling 2 of the Octobers. And when you isolate kind of the premium of October relative to the surrounding months, I mean, that fly is trading at 4.2 right now. And you've seen it, come up quite substantially over the last month and a half, 2 months. It's tough to say whether that's the right amount. I mean, there's still obviously a lot of carry being priced into the term structure. It's natural that, a future out there should trade at a 3 to 4 to 5 point premium to the VIX. But where I think we'll be keeping a closer eye on is as it starts to get into the 3-4 month range, seeing how it really reacts. I know that there has been some volume out there in those futures, but the illiquidity and to actually hold that position on our books for that long, it's not something that is really something that we're looking at trading at this time. But as I said, as it starts to come closer into expiry, it's something that we'll definitely be keeping an eye on. For what it's worth, it seems to be fairly in line with how the term structure of volatility, or rather variance on the S&P 500 options market. It seems to be somewhat in line with that, which I guess you could consider as kind of the underlying for these VIX futures contracts, if you were to, think about what the VIX really is. But, as I said, it's not something that we're looking at trading quite yet.
Yeah, it remains remarkably persistent. We had Matt from ORATS on the show a few weeks ago, and I think he termed it, I believe the Meatball agreed, that it was dramatically overpriced and needed to be sold immediately. Yet the market is maintaining, in fact, even widening it out there a little bit between September and that October future. Speaking of the futures, our old friend, the Spikes futures, still halted. We're hoping to have some more clarity on that sometime in the near future, pun intended. And we can hopefully have a lot more going on that front. Speaking of stuff going on, Simon, your baby had quite an active week out here. Spikes options lighting it up out here this week, setting new OI records. We talked on the show last week. It was about, I think, 69,000. Now we're up to about 90,000 contracts out there in the OI. So I know that's pretty much a new record there. So pretty much almost every week this year, it seemed like we're setting some new records out there. Let's break down the top positions really quickly, then we'll get into what was trading. Number one out there with a bullet, March 23s going up, or I should say open, 33,500 of those. Number two, it's our old friend, the 1x2, March 16,750 of those. Number three, the April, going out to April now. April 25, 16,500. Number four, the April 17s, 8,250 of those. And round out the top five there, 6,000 of the Feb 26s, kind of a little bit of a, shall we say, the vestigial portion of the 1x2 that is still open in Feb. So if you're playing the home game, it's got a little bit open in Feb. It's got quite a bit open in March. It looks like he's putting some on now, or he or she or whoever, we don't know, putting some on out there in April as well. Total of 90,000. Let's break down some of those prints that went up. A lot of them looks like they went up on Thursday this week, so the guys got to get this memo here. It's supposed to be Super Tuesday in Spikes, not Super Thursday. But we saw quite a few prints going up. Looks like 3,000 by 6,000 of the March 18 by 25, 1x2 going up for $1.35 and 30 cents against 3,000 by 6,000, so 1x2 again of the April 17.25. So looks like widening it out a little bit there as well, going from 18.25 to 17.25, doing it for $2.05 and 54 cents. Also seeing looks like Ape 17s going up 5,000 more times, as well as 10,500 of the Ape 25s. Looks like maybe 17.25 going up there as well of the April 1x2. So more of it. He did another 5,000 by 10,000 times. Looks like a total of maybe it looks like about 16,000 by about 8,000 and change out there. Mr. Simon, you are the Spikes father. After all, what are your thoughts on this consistent 1x2 rolling going on out here, and indeed adding, not just rolling, but adding out here in Spikes, and any other prints catching your eye out here this week, sir?
Yeah, well, I mean, we couldn't have asked for more, to be honest. I mean, as you mentioned, and as everybody knows, we had a little bit of trouble with having the futures taken offline for a little bit. By the way, very, very positive about the return of that in pretty short order, so pretty stoked about the impact that that's going to have. Clearly, it makes it easier for people to hedge themselves if they're trading options, if they have the underlying future. Everybody knows that, and so that's a critical part of the machinery. But, it's very, very pleasing to see the kind of trading that's been going on. You mentioned not only an OI interest, but I think it was a few weeks ago we had an all-time high in terms of the average the daily volume. So it was about 110,000 or something like that. So, we've still got a long way to go. But I think I'm pretty pleased with where we're at, especially given the sort of disadvantage that we've had by not having an underlying future. So one of the things that, maybe some people aren't aware of, but, we do offer tide trades. So if people wanted to do a delta hedged position, it's very easy to do on the MIAX platform. So, I'm pretty happy with where it's at. Can't wait until the futures come back, obviously.
Yeah, the futures don't seem to be holding back the volume any. That's for sure. The lack of a future, I should say. Pat, I'm not sure if our producers told you, but you are technically occupying the MIAX Spikes hot seat on the show. So you are now legally obligated to discuss Spikes for the rest of the show. So has Spikes come across your radar at all, sir?
It has. I had a question for Simon because it's something that, I noticed, but I'm not sure what the answer is. It seems that Spikes tends to trade at a premium to VIX most of the time. Is there a reason why that is? I mean, I guess for in terms of relative value type opportunities, what do you see Spikes pricing in a premium over VIX? What is the reason behind that?
Sure, that's a very good question. I assume you're talking about the actual index value. When you look at
Correct.
the derivatives themselves, they're virtually the same as VIX. Now, the reason that there's a difference is because Spikes Index, we use SPY as the underlying as opposed to SPX. SPX is a proprietary product that is a deal between S&P and CBOE, so we can't use those. So we use SPY. Now, the thing here is that there's a couple of wrinkles or differences with the SPX in that SPY options, they have the SPY contract itself has an underlying dividend, which obviously the index for S&P does not. And so that what that does is it creates a volatility premium. So the correlation between the two cash indices is 99.9%. So effectively, they are economically the same thing. However, through the course of a cycle, so quarterly, you will see some differences because the SPY contract becomes pregnant with a dividend, and therefore the volatility premium is higher. And so that's why you'll see these occasional differences. But in general, as I said, the average levels are pretty much the same. You can see spikes higher, especially during those quarterly dividend periods. But also there can be moments when it's a bit lower because we have a slightly different algorithm than that is used by the VIX. We don't use the weekly contracts. And so sometimes you'll see they come into play, and that can actually make the spikes lower than the VIX. But in general, economically identical.
Look at that. And I was just joking about the Spikes hot seat, but he came prepared with some Spikes questions there. So there you go. He lived up to his Spikes legal requirements. Let's move on out to what's going on in VIX options lands out there. Coming into showtime, it's not a heck of a busy day out there, all things considered. There were shy of 200,000 contracts coming into showtime. The ADV right around 475,000 or so. So elevated beyond the shy of 400K that it was not too long ago, but not quite 500,000 either, which is, this early part of the year, not terrible. Then again, January was a rock'em sock'em robots month, as we saw from the numbers out of OCC and even CME out there. So maybe expect a little more ADV, but we shall see. Let's break down the top 10 positions, what's open out there, what people are up to out there in VIX land right now. Cost you 152,000 contracts to break into the top 10. That gets you to the Feb 20 calls. Number 9, $1.55 of the Feb 13 puts. Number 8, 164,000 of the March 28 calls. Number 7, 168,000 of the Feb 15 puts. Number 6, $1.95 of the March 24 calls. Number 5, 209,000 of the Feb 14 puts. Number 4, 213,000 of the Feb 23 calls. So we got a nice little call strip for the rest of the way here. Number 3, about 250,000 of the Feb 22s. Number 2, 267,000 of the Feb 25s. And rounding out the top 10, number 1 with the bullet this week, 272,000 of the March 25s out there. So it looks like calls back in favor. It's been interesting. It's been roughly 50-50 for a while, or it's been puts leading the dance this week. Calls leading the dance, pretty much 70-30 out here. So read into that what you will. Maybe some folks looking for a little bit more vol coming back, maybe a little bit of aggressive fading. Obviously, our friend 50 Cent kind of gumming up the works there a bit as well. Right around 7 3/4 million contracts outstanding, about 5.5 million on the calls and about 2.25 million on the puts. Let's break down some of the paper that's been going on out here this week. Like we said, not a hugely active week. Monday, for example, only 231,000 contracts on the tape. The big prints were some March 23s going up about 13,000 times, right around mid-market. See some Feb 14 puts and April 30 calls, both going up about 7,000 times as well. Looks like maybe a bit of a Feb-March call roll, though a bit of a weird one. The Feb 29s going up 6,030 times for 7 cents against March 37 halves. Interesting strike selection, about 6,000 times for those. Doing the whole thing for a whopping 5 cents here. A bit of a June put spread as well, 5,000 out of the June 13-14 put spread, but not a ton lighting up on Monday. Get out to Tuesday, 313,000 contracts on the tape. The big print, 14,000 and change of the March 21s. Going up, again, kind of mid-market leaning towards the offer there, 63 cents. And 11,000 of the Feb 25s going up for about a dime. Again, kind of mid-market. 10,000 of the 8-15 puts as well. And maybe a bit of a put roll. June 15 put roll going up 10,000 times for right around even money, about a penny premium to the June, which is kind of interesting. And going back to what we said, how that term structure may be a little bit interesting out there as well. Wednesday, one of the more active days of the week, pretty much at least if today holds, it's going to be the most active day of the week. Nearly 500,000 contracts on the tape, including our old friend 50 Cent coming back for size. About 100,000 of the March 24s going up for 49 cents. These are indeed opening. So he's piling into more March. We were talking before, when's he going to close? He did close some stuff recently, but his opening here on the Marches to the tune of another 100,000 for 49 cents. Outside of that, looks like some 16,000 lots of the Feb 24, 27 vertical going up, or actually maybe someone legging into that because they didn't go up around the same time, but same size. And then about March 22s, about 15,000 of those going up there as well. Thursday, another light day, 383,000. Maybe some more 50 Cent coming in. That's his strike. The March 24 is going up another 50,000 times for 49 cents. So looks and smells like a duck. Probably is a duck. That was the big print of the day. And then a bit of a Feb call vertical. Feb 22, 27 call vertical, lighting it up for a whopping nickel, 19,769 times. So maybe rolling up to the 27s. That would be an interesting choice if that was indeed the case. I don't know. Let's see. Was it opening on... it wasn't opening on either leg. There's so much paper on both strikes, so it's kind of hard to tell there. But interesting if that was indeed a roll. Maybe, perhaps head-scratching. And then today, because I come to Showtime, not a lot on the tape, shy of 200,000 contracts. The big print out there, the March 22s, they went up for about almost 15,000 times, 14,500 times. For 57 cents, kind of right off the bid there, but it was a pretty tight market. And looks like a bit of a Feb put spread as well. The Feb 15, 16 going up 4,000 times. Maybe a bit of a roll there as well. But either way, that's pretty much it for what's lighting it up today and indeed this week. Let's go out to the Rock Lobster, sir. What was lighting up your tape in VIX options activity? What was catching the eye of you and indeed your Vol Club traders this week in VIX options, sir?
Well, 50 Cent coming back was interesting. Even with a bunch of the Feb right now just being left open. So I guess he's looking for the next big score and then roll into March.
Everyone's been asking us about that. Does that surprise you that he hasn't closed more of that?
You know, I mean, look at his strategy. I mean, I think he buys them and he holds them and he holds them until expiration and figuring that, you know, he makes one score a year or two scores a year and it pays for 2 years of activity. So, I mean, it doesn't surprise me because I've seen it before. A lot of them go out worthless, or he rolls them actually when he can. So I haven't seen that activity right now. It's just buying more. And I think a lot of, me included, I thought there'd be a little more action on, let's say, for a 13 handle for VIX. We still could get it by Wednesday, but with the weekend and everything else, I think there's a lot of like 14, 13 puts that there's some pretty decent open interest there for the cycle that I think they could just be zeros. And normally you would think with a alt rally to this level that you would get at least a drop into, you know, like the mid 12s or something, but not happening. So I think one of the stories is some of those, you could have some sadness on some of those puts. You know, people grabbing them when, you know, VIX was higher and they're looking for vol to come down, and we get kind of like I would call a soft drop in VIX, not a really hard one. So from an activity point of view, that's you know, mostly what I was looking at in the option contracts. There was nothing really super standout this week. Like I said, it's kind of a sideways week.
Yeah, a bit of a weird one. Pat, you said you guys watch VIX options and indeed trade them over there at IPS. Anything catching your eye out here in a somewhat middling week? Maybe any trade setups that you saw or maybe you guys are up to out there in IPS might be interesting to our audience. And also, everyone's asking about 50 Cent. So if you have any thoughts on that, what he's up to, why he hasn't closed, or any of that fun stuff is catching your eye, sir, now is the time.
Yeah, so I guess I'll start with the 50 Cent trader. And, you know, I think it is kind of his MO to only close a portion of those positions. You know, based on what we've seen back in 2017, I mean, to monetize during those events, it seems like he's only willing to take off a few 100,000 of the, you know, at times million plus contracts that he owns. I think we actually wrote a white paper in 2015 talking about what we called a VIX call ladder, which is similar to the 50-cent approach where you're taking a defined amount of capital. I think that's why he buys 50-cent options. It's just kind of a proxy to pick up a cheap lotto ticket type option on, upside and volatility. But, at the end of the day, if he's hedging a book of, some type of risk, whether it's, I've heard high yield bonds, I've heard equities, whatever it is that he's hedging, if that premium goes the way, if it just expires worthless, it's really not a bad outcome for them because it would seem that they're probably making money on the other side of that book. So I think from that perspective, it doesn't seem like he's the type that's trying to, buy the low and sell the highs in vol. It's more of a systematic hedging overlay to a portfolio that, might be a little bit overly exposed to risk. And so I think that from that perspective, it makes sense that we haven't seen him monetize. It is interesting, however, when he does start running the strategy again, that, it's their view that, it's worth allocating X percentage of our capital in this, in the next however many months to a hedging program, which I think tells us a lot about, the environment that we're in. And then, as far as other trades that we've been looking at on the VIX, it's interesting. I completely echo what Andrew said with the Feb puts. It's a trade that, we like Feb puts. I think that the long weekend coming up, you definitely have a potential for VIX to be artificially high early next week. Obviously, a lot of headline risk this weekend. But, with VIX settlement, it's you never know what's going to happen. So, sometimes these low strike puts, they can present some nice opportunity going into the settlement, especially if it's being used as a hedge against a long volatility position elsewhere. The size of the moves that you can see around VIX expiration and the, I guess, cost to potential value on those VIX puts can become very skewed if you can pick up, nickel or dime puts, and then you do end up realizing that move. I know that, December was one of those months where the value of those puts really skyrocketed. And so, we do run a sleeve of the strategy that trades in that space. This month, I do think that there is the potential for downside. I get the impression that people were somewhat under-allocated, kind of initially to being long those downside VIX puts because there was a lot of research and talk about how there's going to be a floor in the VIX due to, the Super Tuesday. And so I know that a lot of banks were pitching trades that were selling downside Fed puts. So a lot of the buying that we've seen over the past few weeks could have been, covering those downside puts that were, mostly being used to finance upside. That obviously, if you didn't monetize it within a day, a couple of Fridays ago, you pretty much missed out on that. So it'll be interesting to see what happens early next week. I think that there's always the potential for large deviations in the VIX settlement. And so, sometimes the VIX options market presents you with attractive ways to play that type of trade at a very low cost.
So just to confirm for our audience here, you are stating 100% unequivocally you are not 50 Cent, sir.
I can say 100% I am not 50 Cent, but I do like his approach, and I think that, it gets a lot of media exposure, but, I think it is a relatively sound hedging strategy, assuming that, they do have a much larger book of risk on the other side.
I like to get that established firmly for all of our listeners. All of our guests has to swear the oath. Simon, really quickly, you have to keep going, but any thoughts on what you saw out here in VIX options this week, or perhaps the ongoing debate over whether or not 50 Cent should have liquidated more, perhaps, of his position recently?
Yeah, that's a very interesting one. I mean, this has come up a few times, but look, I think he's obviously hedging some other exposure, so he doesn't need to really get out of them, and that seems to be his modus operandi. So good luck to him. Obviously, it's more important for him to hedge that position than to sort of make money per se out of that thing. So that would probably give him leverage and flexibility to take risk elsewhere. And so net, obviously, he's finding that to be a profitable venture. So otherwise, yeah, I think it's been relatively sleepy this week. And as we said at the top of the show, I mean, kind of surprising given all of the sort of stuff going on in the background, whether it be macro stuff or whether it be coronavirus, who knows. But every day there's more and more news and conspiracy theories about what's going on in China too with regards to the virus, and it doesn't seem to have any impact at this point on the market. It's quite astonishing.
We mostly hang our hats out here in the volatility products, but obviously the broad index products are what drives all this fun volatility stuff. And Pat, you said at the top of the show you saw an interesting trade go up in SPY you wanted to talk about. So let's get it in there now. What were you looking at in SPY this week?
Yeah, so something that was put on my radar was back in early January, I believe the 9th through the 15th, there was a trader who bought about $45 million worth of the Feb 332 calls. They paid, about $250 per contract. That ended up being about 180,000 contracts, which, in the SPY is a huge number. Even in the SPX, if that was 18,000 Feb calls, that would have been a huge trade to print. And this was earlier this week, I think it was Tuesday or Wednesday. He sold out of those at an average price of about $590 and rolled those into March 31st and April monthly 345 and 346 calls. He took some money off of the table on that trade, and these strikes that he's still long, he owns about over $3 billion notionally of SPY. They're about 2.5% out of the money. But I think that the trade, minus the sticker shock of making such a huge amount of money, it speaks to the attractiveness of implementing your exposure to equities using call options. What we've found, and kind of one of the tenets of our strategy, is over the last 3-4 years, there is a lot of opportunity in buying call options. People think of, if I'm going to get exposure to the underlying, I can buy stock, I can sell a put, I can do a covered call. But, those three trades tend to be very popular and taught about by options education courses, but people don't really talk about buying calls. If you're a trader who, doesn't need to hedge the delta out of every trade and explicitly trade vol, there is a gray area where you can utilize some of these facets of skew and term structure and understanding volatility surfaces to get very cheap asymmetric exposure to, equities, whether it's, individual stocks or whether it's indexes. And these trades have, very clearly become quite popular and also quite profitable for the participants who are running them.
We were joking, I think it was on the option block this week. They went in doubt, just buy calls these days. You look like a genius. And we were joking, but, this has certainly been a good environment for it. And it sounds like your friend out there in SPY has done fairly well doing just that. And it sounds like he has still some on, and unlike some others, he has taken some off as well, which is interesting to see. We're kind of run up against, we have to get to the crystal ball too, but I want to squeeze in some VXX, aka the product all you guys and gals out there love to fade. Well, it's been working out for you this week, down another about 0.65, or they're right about 1360 right now. Decently active day, not a ton of paper on the tape out there, but about 200,000 contracts. The ADV is north of 300,000 now, about 324,000, so a pretty active day. Let's do a quick top 5 as opposed to the top 10 because we have to get rolling here. Number 5 out here in VXX are the March 22s. Number 4, Feb 13 puts, about 58, almost 59,000. Number 3, March 23s, 61,000. Number 2, 62,000 of the Feb 24s, and rounding out the top 10 here, or indeed our top 5 this week, are the Feb 15 calls, 67,000 contracts open. Notice the Feb 13 puts have dropped. They were number 1 with a bullet last week. Looks like someone has been piling in perhaps to the March 23s, Feb 24s, and Feb 15 calls. So not all puts all the time. And those Feb 13 puts looking a little better now than they were last week. Before we roll on into the crystal ball, sorry, listeners, we're up against it. No time for your volatility voicemail here this week. But, Pat, really quickly, you said you guys watch a VXX out there at IPX. Anything catching your eye out here this week?
No, I think it was pretty slow in that product specifically. I just think that VXX is a less attractive product with, on a relative basis, a pretty flat term structure. The amount of contango right now between 1 and 2, especially with, the roll coming up. It might get more interesting next week when you start to, the ETPs will be owning February and start rolling them into, we'll own March and start rolling them into April. Things might be a little bit more interesting, but this week, not too much to talk about.
Mr. Rock Lobster, anything lighting up the vol club out there for all of your various vol crazies in VXX?
Not really. Just because the reason this is such a weird part of the curve, the future curve is so weird. It's not producing a lot of VXX love. That it's down near $13. Like, where is it going to go on the downside? It does have good potential to drop if we get a little bit of jazz going on, but it's in a very odd. It feels like it's in a suspended animation here until at least we move through, get closer to the third, and see what happens, or we get some kind of improved news out of China on the coronavirus. But as far as that goes, I think it is a tougher trade, but a still decaying trade because the futures do melt every day, and they're still in that, let's just call them gentle melty position. Not huge melt, but little tiny melt.
Gentle melty futures. I like it. Sounds kind of delicious, like maybe a soft chocolate bar that you've melted over a s'more or something. Well, that was an epic volatility review, listeners. We didn't even have a chance to get to earnings, volatility, a lot of the other fun stuff lighting up our tape, but now it's that time. It's that difficult, that dangerous time. If Pat were smart, he would hang up now because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Mr. Rock Lobster, as I recall, I already claimed victory back on Monday on the odd block, right? So this is all pretty much this is all just a foregone conclusion. This is all just ceremony at this point. Would you agree?
Yeah, I thought I was surprised that you could claim victory on a Monday for a settlement on a Friday, but here we are.
When you're in the big chair, you get certain powers, and one of them is being able to just change the day whenever you want. Was working out a little better right now. The reason I say that is because it was me and the Greasy Meatball last week, and I was feeling a very logical, pretty much sustained level of volatility coming into today, which was pretty much market might vacillate a little bit throughout the week, get a little bit lower, a little bit higher, but by the end of the week, end of the show, right about now, it would be pretty much right around where it was last week, which was I picked a 15 double, 15.55, which was looking pretty good until it wasn't. And Mr. Meatball was at an oddly precise 14.51 for him. And the reason why I bring that up is because VIX Cash right now threatening a 14 handle to the downside at about a 14.08, and we're seeing the spikes at about a 14.52. So Mr. Meatball looking pretty good on the spike side, not so much on the VIX side. And I was about a point and change away. So we all know, got to be within a point to win. So we'll give that one, we'll chalk that one up to the Meatball there. A rare victory for the Greasy Meatball. He's not even here to collect. So there you go. Mr. Rock Lobster, I would normally say you could inherit that victory, but you weren't on last week, so I can't give it to you. So instead, I shall be charitable and extend the dubious honor of going first to our guest. Pat, you are now in the hot seat, sir. Quite literally, you are on the hot seat to predict where VIX Cash and or spikes will effectively settle this time next week at the end of the show, so at about 2 p.m. Central, sir. What is your model? What is your gut telling you?
I'm going to go think, OPEX week tends to be pretty bullish. There's, some forces in the market where you have covered call funds that are being forced to, roll their calls up and out. Those trades, all things equal, can cause a decent amount of buying in the futures, which can sometimes give the market that push it needs to go higher. I think right now the VIX already reflects the premium for Super Tuesday in it. I think that people might be underestimating the potential for downside, especially in spot VIX index. So I'm going to go 13.5.
13.5 for Pat. All right. And Simon, you weren't on last week, so you didn't get to guess. So I'll be charitable. I'll let you go second, sir. What are you feeling for both your own creation spikes as well as for VIX next week, sir?
I'm going to go 14.5 and 14.65 for spikes.
And then a little bit of extra juice there for spikes. So far we got a 1 point wide market. I'll even be more charitable. Mr. Rock Lobster, you didn't even play last week. I'll let you go next. I'm confident enough to go last. That's the kind of guy that I am. Mr. Rock Lobster, sir, what are you feeling for this time next week in spikes and VIX, sir?
Just so that Pat knows, he's only letting me go first so he has a chance to scum me when I put my bid in, just in case.
Yes, that's
he
exactly
wants to go
how
over
it works.
a penny.
Longtime listeners of the show will know it is usually the opposite way, which is why I'm just moving you ahead of me so you don't have the opportunity to scum me as you like to do.
It is the highlight of my week when I get to penny you. I love it. However,
you do enjoy that far too much.
I'm actually going to go. I'm going to go a little north of Simon, even though I think we probably trade 3,400 just because it's so deliciously close in the SPX. I'm going to say like 14.85 because this coronavirus just is not going away, even though it's not enough. It's just that's an annoying bid for vol. It's not anything great. It's mostly just annoying.
That was kind of what I was feeling last week as well. I thought we would kind of maintain a little bit of juice out there because there's only so much you could squeeze out. Of course, Pat's saying maybe the market underpricing the risk to the downside for VIX. That could certainly be the case as well. But I've been on this tip for a little while now that I think there's a little more vol to be had out there. I do love, by the way, Mr. Rock Lobster, when you penny me, but in the wrong direction and end up losing. You penny me by one way, and it goes the other way. That's almost more fun than just winning with the bullseye, which is also fun, by the way. And also how I kicked off the year, ironically. But enough digressing. I'm feeling a little bit more vol as well. I'm going to give you a little bit of breathing room, Mr. Rock Lobster, because I was feeling a little bit lower on 15. I'm going to go up to 15.25. So I think a little bit off my prediction from last week, but not a ton. I still think there are other shoes to drop out here. And, of course, daily these numbers are coming out of China that are evolving, and that, of course, could always add some vol to the mix there as well. All right. Unfortunately, listeners, that music means our hour-long foray into the world of volatility has come to the end. What a foray it was. We talked spikes, the options, and the futures. Hopefully someday soon we talk VIX, the options, and the futures. Got a little SPY in there. Talked some VXX. Talked a bunch of other stuff. Don't worry, we'll get your questions again next week on the program. But before we go, let's go back around the horn. Check in with everybody, see what they have cooking that may interest you. And Pat, since you are our guest, I will give you pride of place, sir. If folks are intrigued, they want to learn more about what you guys are doing over there at IPS, where should they go? What should they do?
You can go to our website, investps.com, investps.com.
There you go. And I know you're pretty active on Twitter as well. If folks want to give you a follow, what is your handle, sir?
It's Pat_Hennessy.
There you go. Hennessy, spelled maybe analogous to the beverage. 2 N's, 2 S's out there. Give him a follow. He's always tweeting some interesting stuff, including his prognostications for our various crystal balls and other segments out there. And Mr. Simon, same question for you, sir, when you're not cranking away. I think we had a listener question for you, so we'll have to come on next week to answer that one, Simon. But we're not cranking away on spikes. If folks want to come check out what else you're cooking over there in T3, where should they go? What should they do? And also, if you have any hints, any teases, now is the time, sir.
Well, in terms of things to do and things to see, t3index.com is your website. Got all sorts of stuff up there. We've recently revamped that a little bit, and we're adding a few more things. So in the next couple of weeks, I will be able to give you some sort of insight into something very interesting. So keep your hat on.
I like it. That's called the tease, listeners. In the meantime, check it out. T3, the letter T, the number 3, index.com is the place to go. And last but not least, Mr. Rock Lobster, you didn't scum me this week because I didn't let you. But if folks want to learn the various nuances of your volatility scumming, maybe they want to join up with a cool club, get a fancy hat, a nice secret handshake, come to the clubhouse, where should they go? What should they do, sir?
Yes, if you want to learn how to scum Mr. Longo and learn how this volatility thing works, go to our memberships area at optionpit.com and see all the goodies that we have to offer about learning how to trade this vol stuff or this Greek stuff or anything, let's just call it option related.
Anything option related. There you go. It's a pretty broad purview, including volatility. Optionpit.com is the place to go. And on behalf of the Rock Lobster and the Spike's father and Pat, who is definitely not 50 Cent, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. I promise we'll get to you next week. Don't feel bad. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.